Hello, everyone. I am Brady Bridges, and I'm the broker and owner of Reside Real Estate here in Fort Worth. And I want to welcome you to another episode of Real Talk with Reside Real Estate. We are a top producing team here in Fort Worth, Texas, and we want this podcast to be a resource for anyone looking to learn more about real estate and the great city of Fort Worth. Today, I am joined by William Adams with Legacy Mutual. He's not only a good friend of mine, he's done all of my mortgages, and I refer him to everyone I can. William has been in the mortgage business for 7 years now. He is originally from Tyler, Texas, and graduated from the University of Georgia with a degree in finance. He got into the mortgage business because he wanted to be in a career that was entrepreneurial and finance-based that allowed him to interact with people daily. William enjoys Georgia football, playing golf, traveling, and spending time with his wife, Shannon, and 3 sons, Bear, Walt, and Pearson. Thanks for coming, William.
Yeah, Brady, thanks for having me.
So kind of tell us a little bit about your team and what you guys do.
So we are a full-service residential mortgage company. So all we focus on is getting people in homes. So we localize here in Fort Worth. So that's, Fort Worth and surrounding areas are where we're primarily focused. And a lot of people, especially when you get into first-time homebuyers, don't understand all that goes into the mortgage process and how in-depth it can be and complicated in some cases too. So our goal is to just make it a seamless, easy, stress-free process, not only for the buyer because they're the one that the most stressed in, because you got to think they're scheduling moving trucks and they're making this big life move, but also for everyone else involved, the realtors on both sides, the title company. We just want to make it a smooth and easy and enjoyable process.
Yeah, that's the other people I've had in here. It can be as easy as it can be, or it can be very hard depending on who you're working with or what goes on. What kind of clients are you typically working with, or is there a specific area of real estate you guys specialize in? Do you only do residential? Do you do any, lot loans, anything like that?
Yeah, so residential is the main thing, but that splinters off into a different spider webs, if you say. So, we can do construction, we can do, we've got some second lien products that are coming on, but primarily it would be, a residential home where someone's buying or building, or moving. So it gets, split off from there when you think about if they're trying to sell, if they're trying to buy without selling, if it's their first time home buyer. So, we do deal with a ton of first time home buyers, which honestly are probably the most fun because, those are the people that really need the education and want to be guided and
right. It's impactful. Like on our end, it's exciting and you can help them actually get into the house they want.
Right. Yeah. No, you get to know these, clients and friends on such an intimate level for so much, you're so involved with people for what feels like a long time, but it's really, sometimes it's 30 days, sometimes it's 6 months if they're taking a while to find a house, but, you get to know them, you get to know who their kids are, you get to know what they enjoy. And, that makes what I've learned after now being in the business for a few years is that the past client interaction is some of the most fun, whether they call you to, buy a new house or refinance or, we've got some past client events coming up that, the people that reach out, it's just fun to keep that database. And you never know who you're going to meet in this business because at the end of the day, everyone's going to buy a house and most people need a mortgage.
Yeah. And I feel like what you guys do is a very, even more so sometimes what we do is a very high trust position because obviously you're looking at everybody's finances. So you do develop some deep bonds because you know a whole lot about them.
Yeah. I mean, it seems like a funny question for most to ask, but we ask people, how much do you make? Well, is that really how much you make?
You're like never supposed to ask people.
Yeah. It's like, I mean, no, break it down. I need to know your salary. I need to know your base. I need to know your commission. So we get, we get real in detail. And honestly, we see ourselves as, we aren't technically financial planners, but in a way we are because, the home buying process is the biggest purchase just about everyone makes in their whole life. So how that fits within everything else you do is important too. When you think about, how much you should put down, do you put 20% down? Do you save some cash to, put towards investments, things like that?
That kind of leads into the next topic. Like what would you tell somebody if they were looking to buy their first house or maybe going to get their second home? How can they prepare and get ready, to make that happen?
Absolutely. So what we tell, especially first-time home buyers, there's 3 main categories that you need to have the boxes checked for a purchase. That's income, assets, and credit. So Having stable and historical income is the most important thing. 2 years in an industry or 2 years in a job is what we're looking for. Have you been self-employed, and how long have you been self-employed? Because that's an area that can get a little bit unique. So having stable income that is documentable is key. Assets, just making sure you have enough saved up for that purchase, and then going into what is the most impactful down payment percentage, because we tell people that you don't start accumulating wealth until after you buy your first house, because you have to save up for down payment. And then once you have that down payment, you can leverage that down payment into future home, roll it into the next house.
But build the equity and roll.
Yeah. But you can't really save money until after you buy your first house. So that's a key thing that we look at is, do you really need to put 20% down? Can you put less down? And then credit, that's the other thing. People come to us and they may have a great job. They may have plenty of cash in the bank, but their credit is in a tough spot from college or haven't ever built any. So really having those three things focused on and working towards having them consistently build is key.
Putting the puzzle pieces together.
Exactly.
So just for reference, everybody, it's mid-December. The Fed came out with the interest rate increase of another 0.5 point. Something we're running into on a regular basis is people are taking that number and directly correlating it to mortgages. So does that always happen when the Fed raises those rates? Like how does that affect what's going on right now in y'all's business?
So usually, great example. So yesterday the Fed raised the Fed rate by 0.5 point, and mortgage interest rates moved absolutely none, because typically what is happening in those meetings is universally known in advance. So the markets have a chance to build in that information. So there's some correlation, but a lot of times the interaction is more about the tone of the meeting, or are we anticipating what's the next meeting in the information that's not yet known. That's kind of what moves our market. So a lot of people say, well, hey, I heard that they're going to raise rates by 0.75 point next meeting next week. I got to find a house this week. And we often have to explain to people that doesn't mean that our rates are going to go up by 0.75 point. We've probably seen more so in this last few months. There has been a little bit more of a rising alongside each other. So it's been harder to, explain or justify, but yeah, they're not directly related. They just, mortgage rates follow economic factors and conditions. And that's one of the biggest indicator of that.
And, one of the things we tell people, it's, if you need to buy a house, you got to buy a house. I mean, it is what it is. And there's always opportunities, to refinance. And I think, don't you have some programs for people now that might have to buy in a rate environment that's a little bit higher for later on when they have to refi?
Yeah. We have certificates that allow you, within a year, or, even in some cases 2 years to have the ability to refinance with limited lender fees and to help, be a part of that. Again, like I said earlier, with the past client relationship, be there for long term for you, that, we know that, the refinance is likely going to happen. And we just want to make sure that we can do everything we can to be a part of that process.
Cool. So somebody coming in looking, what are the type of loan products? What are the loan products? People, when you talk to people, or at least we do, you say, hey, like we try to kind of gauge before we pass them off to you, or even when they call you, like, hey, how much money do you have to put down? What are the loan products and where do they fit in for different types of buyers?
That's a great question. So there's, I would say, 4 primary. The first one being conventional, and this is more of if you have solid credit, you have some cash for down payment, and it's going to be probably the most inexpensive from a cost and fees loan. So it's going to be the best available if you can qualify for it. If you get into some of there's 2 government-based loans, and that's VA, which is specialized for veterans, and it's a fantastic option. Allows veterans to put as little as 0% down, has no mortgage insurance, no matter the down payment. And then FHA is the other one where, it's a really, really good product if your credit's not great, because it doesn't penalize you based on your credit. So, and similarly, it gives you a low down payment option. And then the fourth one is jumbo, which realistically is just a large conventional, but it's because of the size of it has, other, guidelines and restrictions of it. But that's, those are the 4 main loan loan types. And then you get in often other things like construction loans or down payment assistance loans and, Homes for Heroes and doctor loans, things like that. So you can kind of go down that rabbit hole for a lot of different specialized. But if you look at, the market in general, I would say the majority, very high majority, probably fall into those four categories.
Has y'all's job gotten easier now that we're not seeing these crazy appraisal waivers and just wild things that agents have been putting in offers?
I would say yes and no.
I guess the waiver helps.
The appraisal waivers was, because the thing about appraisals and from a lender standpoint is it's literally the one piece of the process that I can't control. I can't control what it comes back at. I think I have a good idea in most cases. So when that waiver was there, it did kind of eliminate that one step where it was sorted out. But I will, it's a great question to ask after going through all the loan products, because you think about a veteran who is highly qualified but wants to put 0% down, or someone who doesn't have a ton of cash or doesn't have a great credit but has credit to qualify.
They didn't have a chance at the past.
They had no chance. They couldn't buy a house. Because and you could argue if you look at the numbers of someone making an offer at or right below list price now versus putting 75 over 6-9 months ago, you could argue that now it's actually looks better and is a better deal. And you think about the equity that you no longer have to go prospectively catch up to the equity you put down. You already have it.
Can work in those seller concessions to buy down the rate.
That too. Yeah, that too. There's a lot of ways that, we can get there. And I know we're sitting here in December. So a few weeks or months down the road, we don't have this informational age, but where rates are today in December are close to where they were in June when the first Fed meeting really happened and people kind of went crazy and the market sort of paused. So you think about how people felt about those same rates 6 months ago, and now they view them in a positive light. And it's just interesting to see how, it's really more of the tone of the market more than it is the actual numbers. Cause like you said, you can always refinance later.
So that's great. What would you say the big difference between you guys, like what you guys do at Legacy Mutual and your team versus like a bank, if you go to your bank or like a Quicken Online, like where do you see you guys fit in, and what's the difference between working with you guys or one of these online lenders or going directly to your bank?
So it's all about service, customer service, and creating value. And that could be in education, that could be in speed to closing, that could be in relationships with other local agents. I had one just this week where the listing agent I had a personal relationship with and gave her a call, and that didn't get the deal done, but it didn't hurt get the deal done for our buyer. And that trustworthiness that, where I live.
You got skins on the wall.
Right.
Which helps.
Yeah. If we're working on one together and you've got a question or a problem, you're not going to not find me.
I don't know if Shannon likes that.
You'll go knock on my door if you need me. And I tell people, if you want to know where I live or you know my phone number, when the deals get hard and when loans get inevitably a little trickier, cause it happens, things you don't know in the beginning come up, or you take on one that's a little bit trickier. Those are when it's, the opportunity to really shine and step up and help make it work. So I think that's the biggest thing. There's a lot of, people who their situation is going to be pretty down the middle of the fairway, no matter who they buy with. And it's really just a matter of, does the timing matter and whatever it is. So those are going to be the big things, is that we can move quickly. We are going to put customer service and value first. And
I think for me as an agent, and especially now having the team, it's always been, we've worked together for 6 years now.
Look at us now. We're on a podcast.
Yeah, big time. You've always gone above and beyond for my clients. You've been available, and you always shoot straight with people, which is really nice, because sometimes, like you said, when things get bad, when a lender gets quiet, it's usually really bad, and you don't ever avoid the tough conversations, because we as agents can't get in front of and help our clients unless we know what's really going on. So I appreciate that about you.
Yeah.
So kind of wrapping up, what would be the three, if you had to give 3 tips to anybody, or if there's like a myth about the home mortgage process, what would you tell people that, are listening to this?
I would say the biggest thing is, if you think you want to buy a house at any point, you can never start the process too early from a conversational standpoint.
What about the people that are always worried about the pulling of the credit? Like, is it that detrimental for someone to come and talk to you and you pull their credit to look at?
It's really not, because the person that maybe has pretty average or below average credit, by pulling it, we actually can get a peek behind the curtain and say, well, you've got this one. Did you know that this has been late for the last 3 months? They're like, well, no, I've been paying it on time. So we can a lot of times find things that they don't know about to way, overcompensate for what, a 4 or 5 point credit pool. So, but at the same time, we all the time talk to people that maybe aren't quite ready to buy, but just say, let's have that conversation and just set up what it looks like tentatively. And then, I usually tell people if you want to start going and driving out and looking at houses, now we need to pull credit. So, because if you're going to find one you like, we need to be able to move fast.
Yeah. So what mistakes do you see home buyers making and how can they avoid them, especially going through your process?
So it's a funny question because I never tell people to live their lives to get approved for a mortgage because, inevitably you're going to need to buy a car if yours breaks down, or you need to do things that can potentially hurt your ability to get qualified. Similar with people that want to go start a company. You don't want to not start a company and then lose your ability to qualify. So I would just, again, say having those, being cognizant of having a conversation and a relationship with a lender is not going to, it's not going to hurt. So that if you do have those questions, just like you would ask a CPA, something that could be tax related, ask your financial planner, something that happens in the market. We really are, part of someone's, wealth board of directors. We want to help and be a lot like, lifelong relationship that helps them with some of those decisions. But from a mistake standpoint, I would just say,
ask before you do anything.
Right. Yeah. That's the biggest thing.
Man, I feel like that's what we truly try is, there's a lot of people that just consider, agents, mortgage people more, but I want to be a trusted advisor. And I know you feel the same way about how you
100%.
Deal with your clients. So quick take, what's your call for the college football playoff?
I think Georgia repeats over TCU.
There's some bias here.
I selfishly, Shannon, my wife, went to TCU. I'm a proud Georgia Bulldog. So we were hoping they would meet in the semifinals, but I'm sure hoping for a national championship matchup. And although I am a big, I root for TCU in any other game, that would be the one game that
he'll be painted red.
100%.
So I've asked everybody. Obviously, you're not from here. You moved here. You live here now. What do you love about Fort Worth, and why?
So I actually listened to Stephanie Casco's answer from yesterday, and it's funny because I would have said something similar. I'm from Tyler, and to me, Fort Worth feels like a very large Tyler. I love the fact that we're a top 15 city and population in the country. And if you asked anybody that lives here or is not from here, they would not believe you because of just the small community and culture feel that it has. I love the character of it. Everything from the where the West begins to the food, and it's just a wonderful place. And Shannon went to TCU and has never left. I got here as soon as I could, and we never will.
Thanks, William. So how could people get a hold of you if they wanted to reach out to you?
So I am a huge advocate of the cell phone. I know that people still like office phones. I'm not a fan of that. So my cell phone to be reached by call, text, 903-571-1596. That's the biggest way for me. Obviously email. We have all sorts of social media, but I tell people all the time you can get me anytime on my phone.
Thanks, William. That's all we've got for today, but thanks for listening to Real Talk with Reside. I hope this is a resource to everyone listening, and appreciate all of you.
Thank you.